Yes, a very good morning, everyone. Welcome to today's session. I hope you're all doing amazing, and I hope you're ready to kick off and see what we have in the markets today. So, in the meantime, we're going to spend about a minute or two as we can wait and see if we can have a few more people join in. Then we can get underway. In the meantime, I'd like to remind you that you're looking for a proper trading broker, a good trading broker, feel free to check the links in the descriptions and in the bio as well to be able to create your FX Pesa account today. And I would like to remind that we have the most competitive spreads. And yeah, we have the best trading conditions tailor-made for your convenience. Yes, so we're going to be starting about 1 minute just need to get a few more people to join in, and then we can kick off. I would also like to remind you that this is a disclaimer. We do not offer any trading advice or signals. All we offer is just insights, and you can always feel free to use them to your best of your knowledge or to help you improve on how you are approaching the markets. So shout out to Paul, Kiari for being the first one in as well. So other than that, we can now get started with today's insights into the markets. And I hope you're all doing well. Once again, coming in from a crazy Monday in the markets. For those of you that saw what was happening on gold and all those after the American trade deals, that we're going to get into in a bit. So first and foremost, we want to look at the news events that we see are possibly going to come in today. So all eyes are going to be set on the US inflation report that is probably going to come out today at about 3:30 p.m. East African time. So as you can see, the forecast is for it to increase by 0.1 to about 2.5%. But you can see the consensus last time was 2.4%, 2.4%. But when you go down and read a bit of news articles, so let's just start with let's start from trading economics, and we have a look at the headline they have in here. So they will tell you that the US CPI likely to accelerate. So why it's likely to accelerate? Because right now, the American economy, we can anticipate that we can now start seeing the Trump tariff effect coming into place. So we have seen this eventually start reflecting on our employment data. As last time, we had that decline, 177,000 jobs created from about 218 in the month of March, and then in the month of March, in the month of April, we had 177,000, which was a decline that people are trying to attribute a bit to the Trump trade policies as well, or the Trump economics. So as well, that correlates that the annual inflation rate in the US is expected to hold steady at 2.4% in April, matching the March figure. On a monthly basis, however, the CPI forecasts are raised by 0.3%, rebounding from a 0.1% decline in March. The increase could be driven in part by recent tariff hikes on imported goods. Meanwhile, our core inflation is projected to remain unchanged at 2.8%, but the monthly rate is anticipated to rise 0.3%, up from 0.1% in the previous months. So the article is basically just breaking down the types of inflation and how they are measured. So we have the monthly rate of inflation here, and the previous was 0.1%, and then the consensus last time was 0.3%. So the forecast that they're anticipating it to reduce to 0.2%. And then we can look at the yearly rate. It's expected to hold steady at 2.8%, as you've seen in the article. Then the inflation rate month on month is expected to pull up to 0.3%, which would be as a maintenance as well. Then now here's how expected inside the kind of increase to 0.5% based on the forecast. So what this would basically mean for the markets is that usually when it comes to inflation, how we want to read it is basically that when inflation is high we anticipate that the Fed is soon going to start doing what? Increasing interest rates as well. And in most cases, people tend to buy in such scenarios, the investors themselves. Basically, because the interest rates are high, that means people will be paying back more on loans as well. So usually when the CPI data comes down a bit high, we tend to see a bit of a longer term bull run on the dollar because investors are anticipating the price is going to increase because of interest rates as well. So that's what happens to the economy in simple terms. And when the inflation rate is low, it's good for the economy, but the currency doesn't tend to have that much of a bull rise. So usually when you're looking at such news events, like for example, the database news events, you have to understand that they have a different effect on the economy and the currency. When you look at the economy, it's just a general perspective of what will happen to the economy. Are we going to slow growth? Are we going to increase growth? Then in the currency, usually it's about the investors because they are going to be buying bond yields at that particular time. So they are buying bond yields. You need to know what our policies are going to favor them in the buying bond yields as well. So in most cases, when it comes to data-led news events, we want to pay more attention. We will pay more attention to how a particular news event is going to affect the currency, then the economy after that. So that's where the CPI is a major focus for today. As we go into the news day as well. So on top of that, we want to look at how the tariffs, as we all know, the tariffs have been affecting the markets a lot. And you have seen this ever since Trump's Liberation Day, tariffs were brought into place. We have seen the effect they have had, especially on pairs like gold. So here that's for Rich from BBC on the business sector. What does the US-China tariff deal mean? So for those of you that remember very well, last week on Tuesday, I did mention that if we see a de-escalation, we expect a strength in the dollar, and of course, some other currencies will be expected to gain. So what that would mean that we would see a drop on gold and of course a drop on pairs that are paired with the US dollar, but real XXX, USD, you expect some drop on them. Then of course, a buy on pairs that would read USD XXX. So pairs like GU, EU would look for some assets because we would see dollar strength in terms of a de-escalation. So what does the US-China tariff deal mean? So this is basically also an escalation, as we anticipated. This means an escalation in the same way. So, and you have been able to see that yesterday, after Besant came in to start announcing that, we were able to see the dollar gain some strength. We saw gold dropping, GU, and those kinds of pairs giving us some kind of gains on the dollar side. So, I'm having an issue with my webcam. It's not so stable, so I'm just trying to figure out the best place to keep it. All right, so as I was saying, the article reads, the US and China have agreed to a truce to lower import taxes on goods being traded between the two countries. So the agreement marks a major de-escalation of the trade war between the world's two biggest economies, which has sent shockwaves impacting countless other countries, including the UK. Here is what it means. So what has been announced is that the US and China have confirmed a reduction in tariffs. So if you do the calculation, the tariff deduction was just 115%. America was charging 145%, and when you deduct 115%, moving to 30%, while the Chinese tariffs are moved from 125% to 10%. So China also halted and scrapped off the non-tariff countermeasures such as export of critical minerals to the US, which it put in place in a response to the initial escalation. The US measure still excluded extra 20% component aimed at putting pressure on Beijing to do more to curb the illegal trade of fentanyl. So then what happens after 90 days? So now, the deal they have so far is to go into a truce from the escalation of trade tariffs. So a truce is like, for the meantime, let's have this rate. Then within the 90 days, as we do other discussions, we can later on see if we can come to a consensus. If they fail to come up to a consensus within 90 days, a re-escalation may occur. But if they get a deal, we shall see a de-escalation and possibly a sensible trade deal going on. So here they say that even if the suspended tariffs are reinstated for 90 days, because the vast majority of the tariffs that were announced after Liberation Day would have been cancelled, US tariffs on China would only raise to 54%, and Chinese tariffs on the US would raise to 34%. So the talks will continue as well. So moving away from that, we have an article here talking about gold's move. and how is it safe for investors. This is very crucial because many times when you're looking at geopolitics, we tend to want to pay attention to how these geopolitical moves of fiscal policies are trying to affect, particularly gold, because we like trading gold a lot. So, all right, so let's just read part of the article so we get what. I just a brief understanding what this article basically means. So, let's say Emma is a strategist and director of Haldon Garden Metals, a family run gold dealership in London. Haldon Garden Jewelry District, and this is an proposing tab for a brick. Okay, that's not very important. Let's just see where we can get something that can be more relevant to us. Okay, so here it is. So gold is currently on a roll. Its price has increased by more than 40% over the past year. In late April, it rose above 3,500. Now that came from the trade de-escalation we're seeing because investors are running to gold. So this marked an all-time record, even allowing for inflation, exceeding the previous peak reached in January 1980. Back then, dollar price was $850 or $3,493 in today's money. The economists have attributed this a variety of factors. Principal among them has been the unpredictable changes in the US trade policy. So once again, we have the US trade policy coming in to affect gold prices. So introduced by the Trump administration, the effects of which have shaken the markets. Gold, by contrast, is seen by many as a solid investment. So fears about geopolitical uncertainty have only added to its allure. Many investors have come to appreciate the relative stability offered by a commodity once dismissed by billionaire Warren Buffett as lifeless and neither of much use nor procreative. Then say it's a kind of conditions that we consider a bit of a perfect storm for gold. So here they go ahead and say it's a focus on potential inflationary measures, recessionary risks arising. You've seen the IMF economic forecasts very recently, but what goes up can also come down. Now, this is a cautionary measure. So while gold has a reputation as a stable asset, it is not immune to price fluctuations. In fact, in the past, major surges in price have been followed by significant falls. So what is at risk is that this could happen again, leaving many of today's bigger investors nursing big losses. So anyway, what they're trying to show you is that there are conditions on the global world trade policies that come in and they tend to influence the price of gold. So whenever you hear of things like geopolitical tension or uncertainty, you hear of uncertainty that like that, recession fears, things like this. You're always going to try and see some kind of movement on gold, and usually it's just the investors trying to play safe, and they want to run, of course, to gold to try and keep their money safe because we have seen gold being not only a stable asset or commodity, but it keeps appreciating in value. And here they mentioned that in 1980 it was at $850, which is equivalent to $3,493 in today's money as well. So away from that, let's just see if we have anything else that's major moving in the market. Then we can now go down onto our technical analysis as well. Also the Trump tariff as well, and they say that analysis Trump's tariff leads yield deals, but misses global trade fix. So let's just look a bit of what's happening on our stocks. Then we shall look at the indices, the indexes. I will go into the technical bit of it. So the stock market today, though S&P 500 NASDAQ futures slip, despite our Wall Street sharing for US China trade deal. So here the US stock futures traded down after markets are roared on Monday following the announcement of a deal between US and China to dramatically reduce tariffs for 90 days. The futures attached to the Dow Jones Industrial Average are inched 0.2% down. The tech heavy NASDAQ 100 slipped 0.4%, and the benchmark S&P 500 sub 0.3%. So the temporary agreement slashes US tariffs on Chinese imports 30%, from 145% and the Chinese tariffs on US goods to 10% from 125% effective Wednesday. So this agreement will go into play tomorrow. Actually, so during the 90-day pause, the countries have said they will try to negotiate a more long-lasting trade deal. Progress between the two trading partners triggered a buying frenzy on Monday, sending the index soaring and giving big tech stocks a sizable boost. So we saw that coming in early yesterday. Then they're saying on Tuesday, investors will get a first glimpse into how President Trump's tariffs have impacted inflation. Now that will be the major mover today when we see how the CPI effect has reacted to the past 3 months or the past 100 days plus of the Trump administration. So yeah, that's what I want to look into. So other than that, we are going to be diving onto our technical analysis as well. So allow me just prepare and share the second screen so that you can have a technical perspective on two currency pairs as well. So just a minute as I get the other screen for you guys. So, all right, I think we're going to cope with gold, then we shall look at some currencies, and then consequently we shall try to drift into some indexes as well. So with us here, we have a gold chart. We have this gold chart on a daily time frame. So as you can see, gold has been on a very big rally for quite a period of time, and this all there since November 2024. We have had that very big rally to the upside. Let's get a shift from here. So it's on a daily time frame. So we have our monthly period separators. So you can see when this month kicked off, we had this push to the upside. So this was from April 29th. Then May, we had this push to the upside, and now we see price is pushing to the downside. And we all know that the Trump tariff deals or the de-escalation has been facilitating this correction move to the downside on gold. So when you look at what happened yesterday, we did see this correction was that Chinese announcement coming, and we saw it drop to the downside. So right now we're hovering above our support level. We're hovering above a specific support level that you can see around here. That we're looking to see price can be able to gain momentum and probably break below it. And now that you can see that America is getting some deals in, so investors will be more comfortable in times like this to try and expect to see some moves pushing gold back so they can reinvest their money into other currencies. So from here, this is the daily time frame. Yesterday was a bearish day. So what we anticipate openly would be a push to the upside, then consequently hope to see our price continue to the downside. So right now, when you look at this, we do have a big supply level over here, but we did have a gap down around this area. So you can see our gold probably coming to the supply levels and push to the downside. So this is why we would like to look for some sell opportunities to try and push back into these areas and consequently see what price can be able to do from there. So just in case I will get the momentum coming in, or the CPI data comes out and it's actually negative for the dollar, that will be later on in the day, we can probably see price try and push back into these areas above here. So usually I used to like the idea of wanting to trade gaps that have been left behind. The challenge with that is that we have seen many times when price doesn't necessarily go to the filling those gaps based on sentiment. So the sentiment right now would be the dollar is gaining some strength. As we can see here, we do have a support level that's currently holding price right about now. So let's just try to set. So can I get this? So we do have this support and resistance level that's currently trying to hold some price. So you can see this price from just this stationary level push to the demand levels below here, that can be able to look for a good demand on possibly our 3-minute time frame as well. So we do have a good level over here. In case this area tends to give us a breakout from here or a break below this level here, that would be our confirmationary level. A good break below this low, then we can expect a retracement. Then we can look for those sells on gold pushing all the way to this demand level below, and we just mark it out. So we can see our gold push into these demand levels here. If we get a break below here, so we just mark this as a candlestick body. So we do not have a shift to the downside yet, so it's not something you want to play into. So, but just in case that doesn't happen and we see a gold break above these highs, then we're going to see it push into the consequent demand level that we initially marked up here. This would be the very best possible area that you want to look for some sell opportunities as well. So I like trading this kind of area because it's not really a big area for me. I don't really trade the imbalances. I don't advise us are relying on imbalances alone. But what we can see here, the two alternatives is if price breaks right below that lines arrow. So if price breaks below this, you can see it uphold at this demand level. And just in case as well, price breaks right above that high, we can be able to position ourselves for sales within that demand level as well. These are the areas we're going to be looking at intraday, particularly on this pair that is gold. So that's the perspective we're having on gold on a 1 hour time frame. This is what it shall look like. But then the best selling area would still be the push into these upper areas as we had seen over here. So let me just get the arrow. Where is this arrow? Lines. Would be for us to push to these areas, then it's possible to look for the sell down. And just in case the information that comes out and it's not favorable for the dollar, that's when you can now look for price coming all the way into these levels to try and price in some sells. Because as we anticipate some more trade deals coming in for the US dollar. So that's what we're seeing on our gold. So let's have a look or a hint on the Euro US dollar. So this is Euro USD. And this is on our daily time frame. So let's just try to have a look at the higher time frames. There is something we can see up this side of the higher time frame. So we can see that on the monthly time frame, we did see a price breakout from these levels over here. Allow me just change the color of this line. You can have it at black. All right, so have a zoom in from here. So you can see that here, price gives us a breakout. So in that new price gives you a structural break, you can anticipate some kind of retracement that you will on a lower time frame back into these levels. So now that we have a structural break to the upside or a bullish kind of structural break, we can now go down to a lower time frame and try and see if we can get a bias that can feed into that. So when you come onto the daily time frame, we want to look for the next possible levels where probably price could retrace into and consequently give us some buys. So if I come in and look at the daily time frame structures, we do have another breakout occurring here, and then our set price gives us this fall at demand level the price currently at. So this level we can want to refine and try and see if we can build up good selling areas or the best possible selling areas. So if I'm just coming and look into this whole daily zone, you're going to find that there are two demand levels. There are two demand levels that you can see. We have this level over here and this level. So these are the two possible areas we would want to take our buying opportunities from. This will be our level 1. Then you can consequently have this at our level 2. So these are the levels where you want price to come and you probably take a confirmation trade. So as you can see, yesterday's price action, it was able to give us some good buy opportunities from there, because of course our confirmation will come from a lower time frame. And if you go to 15 minutes or your 5 minutes, you're able to see that there were some good structures formed and we're able to take in some buys on that particular level. So top of that, what we'll now look at right now is if we can get a continuation of this move to the upside. So what the continuation mean? If prices continue pushing to the upside, probably to the next, let's see if we have a daily demand level. Yeah, probably to the next daily demand level. So this will be our target or our next daily demand level that you can see over here. So you can realize that the structure is a bit similar to what gold has. So we want something push to that side. But for price, in order for price to push above that level there, we have to break above this strong resistance we have. So if price comes in and happens to break above this resistance levels we are seeing over here, then you can see that push to these areas. But if price doesn't do that, remember our short-term bias right now would be somewhat a bit bearish. So how do I get this? How do I get this straight out? So let's just have a look at this way. So if we see it break out to this downer side, so we do have a minor level over here, and if you see it break out, you can see it shift in, then push to the downside. So let's just try to mark this out differently. So you can have this in that brown kind of color. So if we see price push way below that level, right, I'm trying to see if I can make this vertically elastic or something like that. So anyway, if we see a break below these levels, we can see a push, probably take out the lows, then go to the next level that is all the way down that we can target. So it's something we want to see or try to look at and see if price can give us this. So I'm unable to zoom this in the way I want. So let's do this way. So yeah, we can see our support level right now. Price breaks below, you can see push the downside. And then from up here, we have a free range all the way here that you would want to, you wouldn't want to miss out on a free range opportunity as well. Just make sure you get your confirmations right, and of course, manage your risks the right way. So we have this alternative of price breaking above this resistance and pushing to the upside. Then we can also look at the alternative whereby price pushes to breaks below the support level, then look to take out these highs. Now, of course, with this, you'd want to risk less, but if price breaks are below this, remember we have a free zone to the downside as well, then you can now be able to take that as well, all the way to the next level, which is this red line we have over here. So those are the things you can look at in terms of Euro USD. Those can be our possible outlooks when it comes down to Euro USD. So let's move on to another pair. That's our Euro USD perspective. So let's look at USD JPY. Just add it up to my chart window. I had one here. So it's our chart sheet. All right, so this is USD JPY, and what we can see from a higher time frame perspective is this price has just broken out of this level over here. That is kind of like our resistance level. Just give me a second. All right, sorry for that disturbance. So as I was saying here, we do have this resistance level that price has just broken above it. So what you can anticipate is to see some kind of retracement on a lower time frames. On that retracement, you can be able to look at some opportunities and see if this rally on USD JPY can continue to the upside. Right now, we are having some bulls coming in on the dollar pair after the US-China agreement. So right now, we can see that on a 1 hour time frame, we are get this curve. It's okay. Yes, much better. So when you look at this right now, this is on our chart, we can be able to see that there is a support level that is right above around these levels here. So if we see a break below these levels, then we can now come in and anticipate a push to the downside. we can even anticipate a push to the downside because we do have a free range, and these are the best areas you always want to trade. So you can see a breakout and a retest of the supply level here, where you can get a confirmation and try to, you can push this price all the way to the downside, and this will definitely be your target. But this is very unlikely for our best market sentiment right now, because we do see the US trade bills coming into play that would signal our strength for the dollar. So besides that, when you look at the short-term perspective right now, what you would want to look at would be now it's on a 15-minute time frame. So I've seen a breakout of these levels here. So what we want to see is a price push to the upside from these levels where we're currently testing. We can some kind of retracement into those levels. We do have a resistance level that price is currently broken above. So you can see we had multiple rejections within these zones here, and price is trying to break above. So you can consequently see a push to the upside. I guess price keeps going from here as well. So I'm anticipating a push all the way up to probably the 1 hour demand level that could act as your support, that could act as a target as well. So this is my target. I'm anticipating these bulls to continue to the upside, or this buying pressure to at least this supply level over here. So that will be my target as of now on USD JPY, but that's exactly what I'm watching out for. So it's on USD JPY. Expect that push to that area, probably for confirmation. If price happens to break out of these levels, then you can see it continue all the way to the upside. So let's look at Euro JPY as well. So the perspective on Euro JPY won't change much, because these pairs tend to accumulate the same bias. But what it can do for us is to give us what they call confidence, or boost our confidence levels. When you look at similar pairs doing the same thing, then in most cases you're going to have a bit of the same perspective. So we can see even on the daily on Euro JPY. On the daily, we see that breakout of these resistance levels, not very solid, but you can see that breakout. So when it comes to a lower time frame, you can want to look out. You can want to look out for the same perspective as well, and see if the two pairs can try to align. So unlike USD/JPY, here we see that this level here had been broken below, or this resistance support level here, so we broke below it, tried to retest, then price broke above it, and all that move was supported by the flip level, or the support and resistance flip level that we have. So in this support and resistance flip level, it's when you have this was a resistance, price breaks above it, it becomes a support level. So price came and currently rejecting. So I expect these bulls as well to continue, and we're going to have the whole of this area below, above here, as sell side liquidity. So you can see price break out of this kind of area, retest, then push to the upside as well. So on a Euro JPY, I'm having this analogy, that's what I'm seeing, and so I'm going to be looking out for. Price will break out, give us that retest, then push to the upside from this particular area of the Euro JPY. So let's look a bit at a pound pair. Let's look a bit at a pound pair. So this is a GBP card. This is GBP card. Just change its properties as well. Let's GBP card. Let's look at it from the higher time frames first and see what the bigger picture actually is depositing. So the price action here is in a mess on the daily time frame. So let's look at the monthly and see if they can give us something more precise. So we did have a breakout, then price retested, and it's now pushing to the upside. So coming on to the weekly, we did have this area price tried to cause kind of like a pause, then it's pushing to the upside. So we can anticipate a bit of bullishness on GBP card. So yeah, I mean to expect some bit of bullishness. So what we basically want to see on this, the price action is not the best, not something we want to really base on much. But you can see here we have no major level that hasn't yet been retested. So that will give us confidence that we want to continue the current bulls. However, disorganized they look. But then if you can see a break above this resistance level, then you can see a retracement, then price retraces to the upside. For the case of GBP card data, and price action is in a mess. So it's not a pair you really fancy wanting to look at So let's look at USD JPY as well. So coming to JPY, and it's one of my prepares to trade. It does have a lot of opportunities that it offers out, and of course, the average daily range for JPY is high. So for those of you that are really very scared of gold, you can always look to JPY as your partner in crime as well, or your alternative for gold, because it moves a lot of pips every single day. So as you can see, now we have a breakout of this area and price continuously pushing to the upside. Though currently we're at a resistance level where we can anticipate some kind of so if you remember from the past weeks, we did call the breakout from here into these levels here. Then we talked about this area where price currently buying from, and this was just last Tuesday when we spoke about how price, we're looking at JPY particularly, moves from daily levels to daily levels. So we saw price coming buying to this daily level, sold back to this daily level, and is now bought and now exhausting all the daily levels we have. So based on what the movement is here, we can anticipate based on the momentum that price is going to push and break above this resistance as well. So in that case, what we want to do is to try and see if we can get some opportunities for price to push us all the way up into those particular zones or areas. So that's on a daily time frame. So now when we come down and try to navigate the lower time frame opportunities, what can we see? What will be our best buying areas? So we're going to have two best buying areas. One will be below in case price decides to give us a deep retracement, and the other one will be if price breaks out of a high with anticipated to retrace. It's a very simple analogy you can always be able to apply when you're doing your analysis. So when you look at this chart, we are going to have our demand level first, because usually in most cases before price buys, it tends to go lower to major areas where it can start looking from. So these boxes are basically decision levels or decision areas. By decision levels, we mean that one price gets to those areas, then you can now drop down lower time frames, look for confirmations or look for reasons to formulate a trade in that particular scenario. So we have a demand level that's all the way down here. So this is our demand level. So, okay. So it's okay. I'm trying to figure the trading view out a lot. So sorry, the MT5. So this is our demand level. These are demand levels. So then when you say demand levels, areas where you can try to look for buys from. Then the other thing is this is going to be our resistance level above here. Someone just delete this so that I can have it looking nice and good. So this I'll have a resistance as well. So another thing I can usually mark my support and resistances. I'll mark the wicks that are above here like this, that are above there as well. So this is a resistance level. So if price breaks above it, we can expect a retracement, and then buy. So price won't necessarily retest that support and resistance level, but price can come back to it and you can try and see. When price comes back to this zone I have, my demand zone, my support resistance zone, and price give me a confirmation on a lower time frame. For example, if these are 1 hour zones, when price hits there on the 1 hour, I'm going to drop down probably to a 5 or a 3 minute time frame and look for some kind of market structure shift or some kind of confirmation that I fancy using. And then it's what I'll be able to use to actually take that trade. So what that helps you do, it helps you to take the best quality trades based on multiple reasons, and in most cases are logic as well. So these are resistance level. Then of course, let's see right now where price is. You can be able to formulate currently price in the supply zone as well. So if we see price give us a lower time frame confirmation in this current supply zone, you can see it's giving us some very good reactions. This is the current supply zone we are in. It's giving us some good reactions. So it's on our time frame. So if I go down to the 5 minute time frame and can now look for confirmations, this is how we use these zones here. You just watch the zone. So I tell you about trading being 80%, patience and also psychology. Patience and psychology for me are the same things. So we can see that there's no confirmation formed. So what we want to see price can give us a confirmation within this area here. So usually I take a market structure shift It's one of the easiest time frame confirmations that you can always use to take any particular trade. So if I come through, let me see this. Let me just try to draw this pattern for those of you who are not yet familiar with it. So it's a very simple thing you can always be able to emulate or reuse when you're trading. So we shall have a high taken out, then we can eventually see price move to the downside. This is what you call a market structure shift. So price does this shift, then reduces back into the levels and you take your sell as well. So that's the pattern I use whenever price is inside either my demand and supply levels or in my zones, or if price is at a support and resistance zone. Remember, I use them as zones, and it's always very, very would I say crucial, important, but it's always very, it's a bit more effective than others. So if price doesn't form the pattern of that nature there, then it has no confirmation formed. So you can see price just forming these highs and lows. So what we want to see, price breaks above, to break above the resistance level, retest it into the resistance zone, give us a confirmation for price to sell all the way into this 1 hour. This 1 hour demand level here, where we're going to take our buys later on in the future. So let's look a bit into some indexes. So we're going to actually look at let's start with the US let's start with the German 40. Let's start with German 40, then we look at what the DAX has in, what kinds of structures the DAX is forming. So this is an index that comprises of the 40 biggest companies in Germany. As you know, Germany is one of the largest stocks in the European Union, or the largest stock exchanges in the European Union, and that's why it's a very important index, and you can always take some good opportunities for those of you that trade it, or for those of you looking for pairs to trade, try and deviate a bit from the American indexes. That is a very, very good it's a very good running point, or a running point or something like that. It's a very good place where you can run and be able to get some viable opportunities consequently. So when you look at DAX, we are seeing we have had a breakout of these levels here. You can see we have had a breakout of these zones. So actually I mark my things by the week like this. So you can expect price either to continue, or if you see the lower time frame give us a shift, then you can now look for it to retrace. But as of now, we're above that resistance level, and what you're looking for is to continue the bulls to the upside. So when we look at this, there is no major reason why price would want to retrace back down. In terms of this price has already exhausted most of the demand levels below here when you look at the 1 hour time frame. So we're having some kind of reaction from here. But what we want to look at, if we want to look for those buys, is to see if price breaks above these resistance levels, then we can just continue shooting to the upside, and this is a 4 hour time frame. But if price fails to do that, then we can eventually see it probably break below this previous support level that did hold price initially. Just have this. We had this support here that was holding price initially until the good fresh zone. So either price breaks above this resistance, pushes to the upside, or breaks below these areas, and you can start deep retracement into this free demand level that we have above right here. So that's the perspective we can have on the DAX 40 or the German 40 index. And it's always a very good alternative for those of you that are getting difficult in anticipating the moves that the NASDAQ 100 is doing on the US tech, or the ones of the US 30, it's actually performing consequently. So that's something you can look at as well on DAX. So you look at the NASDAQ next. I think I had it somewhere down here where I have NASDAQ. So yeah. So I do have the NASDAQ here. So when you look at the NASDAQ, let's come from a daily time frame as well. We have been seeing this correction move to the upside, and when you look at the weekly time frame, we do have a supply level that price is trying to push all the way into. So we can expect the price that is going to push up, back up into this particular supply level. Now remember, the supply levels are a weekly time frame. So want to see on a lower time frame, what would price consequently want to do? It is to get to that particular level. How can I retrace, or where I can look for the opportunities? it gets prices to have that kind of retracement. So let me just have this here. All right, so when you look at this, let's just have this. Okay. So when you see if prices retrace all the way down, we want it to come all the way to these demand levels where we can be able to price in and look for some buys as well. So we do have these gap levels. So we'll use a scenario level, or as our resistance becomes support level. But remember, these are just zones as well, not levels actually. They are zones where we want to see and be able to watch if price can on a lower time frame give us a confirmation to carry out those particular trades. Those become our decision levels consequently. So it's the best possible level you can want to buy from, or to wait and look into that price can come from a confirmation. The question is, what if price doesn't go? That what will happen? We just want to see a breakout from this area here, then price will test to the upside to a big supply level where we can look for those confirmations later on. Try and see if we can get some. So, but for now, we're still very bullish. In fact, ever since Trump started cutting back on some of the tariffs on the auto manufacturing industry. So for right now, what we would see is price push, bounce intraday, price will push down here, and you can get some buying opportunities on US 100 within this area here. So this is an area we can watch out for today, or in terms of the intraday outlooks we are having out there. So this is a NASDAQ 100. You can see a push here. Anything below this, we'll see price go all the way into these other levels here. So you can have those two. So we can have those two. So you can see price pushing back to that level already. So you can have these two levels. Either price buys from here, or if it comes with too much momentum, it can consequently then sell and you have a free range. And free ranges are very, very good and interesting to trade because you can hold a trade without fear of favor. And yeah, you can be able to capitalize on certain trades, especially when they give you free ranges to trade into. Or you can have this outlook in case price breaks below this demand level here. So that's our US 100. So let's look at our US 30. Then we shall take in some questions. So if you have any questions, kindly put them in the comment section. We are going to look at them after looking at the US 30 index. So this is an index that comprises of the 30 major big companies in the United States. So with NASDAQ, it's the 100 tech companies with this particular pair. It's the US, it's the biggest 30 companies in the US with this US 30. So if you have any questions you'd like to pass through, kindly put them in the comment sections. We're going to get to them after looking at this pair for today. So as you can see, similarly to what's happening on US 100 or the NASDAQ, you can see a push all the way to the upside, and you can see this demand, this supply level has been utilized. Did have a reaction that didn't quite hold. So right now we look at price pushing all the way into this particular supply levels over here. So this will be our target we're going to look at right now. So right now we're going to look at supporting factors on lower time frames that will be able to push us to this area over here. So what we're going to do is let's just have this. Just have my chart sheet from here. Then take this off. All right, so now in the lower time frame, of course, as I said, we want to look for best possible buying areas from below. Then we can think about breakouts and retest later on. So we're going to look at first our best alternatives. That would be if price can push through the day into this, we have a demand level right over here. This would be a very good level. And then that good level would be right above the resistance level formed. So if price will break above this level, we can expect a retracement and a push into these particular levels. But coming down into intraday time frames is what they call the intraday opportunities that you can also be able to see from here. So when you look at this, we also have a demand level that's very, very good here until they've been fully mitigated. So you can see this price push into this demand level, especially within towards the New York Open. Before the NYC Open, we can see price push all the way to these particular levels or this demand levels. So if you refine it, you're able to get some good demand levels around here. that you can be able to use to take those intraday moves and target this area. The best buy area will be above here. You can hold that price. Below this, you have this, not so free, but it's kind of a free range. You can say push price into these consequent demand levels that you can be able to refine to this particular level. So it can be our outlooks. This would be a buying area as well. Remember, there's decision levels that you want to go to a lower time frame and see if those lower time frame moves can give you a confirmation for this kind of goals or that trade you want to take. So these zones here, we mark them because they're decision levels. You don't just trade them blindly. That's not healthy for you and your trading career as well. So you want to be able to come up with going confirmation patterns, confirmation criteria that you can be able to use. For those of you that come to the academies, we tend to discuss some of these things, and hopefully you know what happens when price gets into these zones, all these levels. So other than that, that's what we had time to look for. So just a few questions that you're going to be able to go into. Then there we can be able to, go into there and see how the opportunities can play out for us. So let's go into the comment section and answer a few of them. In the meantime, we'd like to remind you that we shall be having one trade talk at the end of this month. For Tanzania, it will be on the 24th. So feel free to make it there to the Tanzanian Academy to be able to attend that series of the trade talk. There will be a lot of information to be shared by my colleague. That will be at Prudence as well. So the other thing is that Uganda as well should have our trade talk on the last Saturday as well. Try and cater for everybody. So feel free to come by the office and shall be able to have a whole crash course. Now you can be able to capitalize on your trading skills to try and do a living off of it. So in the meantime, we would like to also remind you that our episodes of Bullish Banter are continuing. Try to listen to what the gentlemen who are invited have to share to you. See if you can pick up a leaf or two, one or two things that can be able to help propel you in your career. Or you may be going through some of these things and you have no idea that are going through them. So kindly be able to watch those Bullish Banter episodes as well. And we're trying to take up every region. We do have people from Uganda, from Tanzania, from Kenya as well. And if you don't have an account, kindly bring your account today. The link is in the bio and experience the best rates. And for those of you that are having difficulties with things like signals and all that, we do offer a signal center on our platforms. So I believe there's a video somewhere in the YouTube channel that you can be able to use to try and be able to take you through the data affair. You'll see our win rate, you'll see everything on the FX Pesa Signal Center as well. All right, so we have the questions. After the first question is any comment on institutions holding the largest short position on USD since GFC 2008? So I'll not say I have any comment on that particularly. I'll get back to you in terms of that. But the thing is that in times like this, we have been seeing people selling US treasuries, or the bonds on the US dollar index. Ever since we started seeing the trade war going on, and specifically we're just shorting it because of the uncertainties going on between the countries. And as I told you earlier, during trade tensions, people tend to either short the bond or withdraw their money from the bond and put it in a safe haven like gold. As far as the largest institution, I don't know much about it. I'll do something and get back to you in terms of that. So that's what I can give you in terms of that. So let's just see this. Yes, so the other thing would be that okay, GPJPY. So we did go through GPJPY analysis. So after I off here, you can be able to roll back on that and you'll be able to see what my insight was. But let me just give you a quick recap on what we concluded on GBP JPY. So we did mark out these levels on a 1 hour time frame, and we say that currently price in the supply level, and you'd want to see some kind of confirmation on a 5-minute time frame also, or a lower time frame, to try and take some kind of confirmation. And I did offer you what my favorite or my usually most used confirmation pattern was, that I did illustrate for you here, which is a shift pattern. So currently price is this level here, so but you don't see it giving us a confirmation. So the idea would be to wait for price to give us that confirmation pattern on a low time frame, probably a 5-minute time frame, to try and minimize, of course, the risk you're exposing your trade to. Then price can go to the downside. So this is what a shift pattern looks like, and currently we're in the supply level. But away from that, we did say that we did mark our resistance level above here, and we said if you see price break above, we can say it retest or retrace into these areas, then buy to the upside. Then of course we had the demand level below here, and the same thing as well. When price gets into it, you want to be able to look for a confirmation pattern and then be able to push to the upside. So as far as the person asking about GBP JPY, that's what we had on GBP JPY to Clevy. So yeah, so I think that's it for today. Thank you for tuning in. We meet same time next Tuesday, and let's see how it plays out today. Other than that, thank you very much. Don't forget to check your accounts, and yeah, peace and love.